The Federal Reserve meets this Wednesday, and analysts expect another interest rate cut. But this decision comes at one of the most complicated economic moments in years. Inflation is still running above target, the labor market is weakening, and policymakers lack key data due to the government shutdown. That combination is creating unusually high uncertainty around this week's announcement. Most economists predict a 25 basis point cut, marking the Fed's third straight reduction. But expectations have been volatile. Just a few weeks ago, the odds of a cut plunged to 30% before rebounding to nearly 87% as new signs of labor market stress emerged. That shift reflects how divided the data and the Fed have become. Minutes from the November meeting show some officials worried that cutting too soon could stall progress on inflation. Others argued that weakening employment makes additional support necessary, and the job market is indeed showing strain. Announced layoffs have surged to 1.17 million so far this year, the most since the pandemic. And ADP reported 32,000 private sector job losses in November, driven mostly by small businesses. At the same time, inflation remains stubborn. The Fed's preferred gauge, the PCE index, is still stuck near 2.8% to 2.9%, well above the 2% target. With shutdown delays holding back October and November job data, policymakers must make a major rate decision without the full picture. Economists say the Fed faces three big questions: how long tariff-driven inflation will persist, how weak the labor market truly is, and whether rates are already close to neutral. Most expect a cut, but also expect dissent from officials on both sides of the debate. This week also brings a new summary of economic projections, which may show a slightly higher unemployment forecast for 2025, and little change in the Fed's expected path for rate cuts in 2026. Even with policy easing, mortgage rates are likely to drift down slowly, not sharply, staying in the low 6% range. Still, affordability is improving. Slower home price growth, rising incomes, and lower rates are helping buyers regain some purchasing power. Wednesday's decision, along with the updated projections and Chair Powell's comments, will offer the clearest signal yet of how the Fed plans to navigate a weakening labor market and inflation that refuses to fade. For direct financing consultations or mortgage options for you, visit Nadlan Capital Group.